When entrepreneurs sit down to choose a platform for launching an LLC, Doola frequently surfaces at the very top of the list. Yet the fundamental question isn't just whether Doola is a solid incorporation platform. The question that stops most founders in their tracks is whether their specific business type actually aligns with what Doola is built to support. Choosing the wrong platform for your industry can turn a quick administrative step into months of legal friction, bank rejection letters, and wasted capital. Understanding which industries thrive using a Doola-registered LLC requires looking past basic incorporation features to examine how banking setups, compliance requirements, and operational structures match up in practice. The first major sector where Doola excels is global e-commerce and digital retail. International dropshippers, Amazon FBA sellers, and Shopify store owners frequently run into significant hurdles when trying to access global payment processors or open US-based merchant accounts. Doola bridges this exact gap by combining state-level LLC formation with employer identification number retrieval and non-resident U.S. business banking setup assistance. E-commerce operations generally run lean and rely on clean pass-through taxation, which makes an LLC structure ideal. Because Doola offers dedicated sales tax registration, reseller certificate support, and e-commerce financial tracking, physical product sellers operating remotely find it to be an all-in-one stack. The problem for e-commerce founders is rarely product sourcing, it is staying legally compliant while collecting multi-currency payments from across the globe. A Doola LLC removes that boundary by creating a fully compliant legal foundation that global payment gateways recognize. A second ideal industry is digital service agencies and remote consulting firms. This encompasses software engineers, marketing agency owners, freelance designers, and management consultants who sell services to clients worldwide. These founders face a unique set of fears when working as sole proprietors. Operating without a formal entity leaves personal assets entirely exposed to client lawsuits, contract disputes, or financial liabilities. Furthermore, enterprise clients frequently refuse to issue wire transfers or contract directly with an unformatted individual based overseas. Forming an LLC through Doola solves the liability concern by establishing personal asset protection while simultaneously granting the institutional credibility of a registered U.S. business entity. The recurring, contract-based revenue of digital agencies integrates seamlessly with Doola's ongoing bookkeeping and annual tax filing packages. Software as a service, micro-SaaS, and digital product creators represent another highly compatible sector. Bootstrapped software creators, app developers, and digital template creators need an efficient way to accept payments through platforms like Stripe, process subscriptions, and track recurring revenue. Many solo software developers fear getting bogged down in administrative paperwork, state annual reports, and complicated local tax returns when their sole desire is to write code and iterate on their product. A Doola-registered LLC provides the exact corporate shield required for software licensing without requiring complex C-corporation setups during the early bootstrapping phase. If a micro-SaaS stays lean, self-funded, or scales through organic revenues, an LLC offers the ultimate balance of minimal oversight and complete operational flexibility. Content creators, media publishers, and affiliate marketers also form a primary category. YouTubers, newsletter publishers, course creators, and podcasters generate revenue across diverse streams including ad networks, direct brand sponsorships, affiliate commissions, and merchandise. Operating as an individual means mixing personal expenses with business revenues, creating tax chaos at year-end. A Doola LLC isolates creator earnings, allows for legitimate business expense write-offs, and provides the framework required to sign sponsorship contracts with major brands safely. However, identifying where Doola is not the right fit is just as vital as knowing where it excels. High-risk brick-and-mortar operations, heavy manufacturing, businesses requiring specialized local licensing, or venture-track startups planning to raise immediate institutional capital from traditional venture capitalists are generally better off looking elsewhere. High-growth tech startups targeting VC funding require a Delaware C corporation rather than a standard LLC structure. Similarly, businesses that require complex multi-tier partnership agreements or custom equity distribution models need high-touch legal counsel rather than streamlined digital formation platforms. The actionable takeaway for any founder evaluating Doola comes down to your operational model and growth trajectory. If you are a digital-first founder, remote agency owner, e-commerce entrepreneur, or bootstrapped software creator, especially one operating internationally, a Doola-registered LLC offers one of the fastest, most cost-effective paths to legitimate U.S. market access. Begin by assessing whether your business relies on digital payments, standard pass-through taxation, and remote management. If those criteria match your model, setting up your LLC through Doola allows you to secure asset protection, establish banking infrastructure, and maintain total legal compliance with complete confidence. With that said, thanks for watching, and until next time.